Hello guys, thanks for tuning back in to Crypto Mainly. Just going to give you a quick update, just a couple of things that I've seen actually as I've been going through the charts today, mostly the longer term charts. So for example this one here, I posted this up a little bit earlier today, so just to explain what this is, it's basically a Fib extension from the cycle high to the cycle low. Okay, and as you can see, the first cycle reached the 2.36, so next cycle high to low 2.36 is where we ended up as the high. Then this cycle, high to low, we ended up this cycle, the previous all-time highs, if you like, was at 69,000. So we actually only reached the 1.618 there. Whereas, based on these first two cycles here, you'd have expected somewhere around the 244,000 mark to be hit if the last cycles were anything to go by. So what that means, basically, if we do this, the same again, Fib projection from high to low, 1.618 is actually at 173,000, and the 2.36, if we get that high, is 526,000. So it's very, that's a long way off. Is it likely? It is possible. It's a possibility. But going by the last cycle and going by the projections that I've done, previously, I think that we're going to end up somewhere around the 180,000 mark at this cycle high. But then again, guys, Bitcoin surprises everybody each and every cycle. So just my thoughts there, obviously based on what I've seen in the past. The only main difference, of course, and it is a significant difference, is what's happened in the last year with things like the European Central Bank allowing, banks to hold 2% of their assets under management in cryptocurrency. And obviously the recent ETF approvals with Bitcoin, and obviously Ethereum has now been, the ETF has now been approved for Ethereum. There's bound to be others that follow, things like Solana and XRP. They'll have their own ETFs, no doubt, now that, we've gone into altcoin ETF territory. So, there's going to be a big injection of, of money coming into the market, that's for sure. I believe there's around about sort of 80 billion in the market at the moment in ETFs. The value of the, the currencies held, I believe, is about 80 billion. And that's, a small amount. It's basically, less than 1/4% of the assets under management that the big market, big fund managers and that hold. So, there's a massive room for growth yet. And we are, we're experiencing a bit of a pause at the moment, but I think that's to be expected. I think it's healthy. But when I was looking at these charts earlier, the reason I did the video is I just want to explain a few things. If we just add a couple of things onto this chart, we'll start to have a clearer picture. So I'm just going to add on the bull market support band, which is very famous. It's made up, as I just open it up for you. For those of you that don't know, I just open it up and you can see it's made up of the 20-week SMA and the 21-week EMA. Okay, that's called the bull market support band. And as we can see historically, in bull markets, you can see that the price tends to find it as support and bounces along all the way up as we go. When we're in a bull market support band acts as support, and when we go below it and we're in a bear market, you can see that it actually acts as resistance. So, and it's quite consistent. If you look back through the course of time, you'll see that it is quite consistent there. So, but the reason just wanted to bring this up now is if we just have a look where we are now. So I'm just going to zoom in. And just something, a point of interest here, guys, is that you'll notice that the bull market support band, it has actually crossed into a bearish fashion on there. And you'll also notice that if we just you'll notice that we've got this high here and we've got a lower high here. So potentially what we could see is we could see like an M top here, and then we could see prices come back down. At the moment, we're not going to say that that's definite, but certainly I'm just going to show you. If I look back through history, I'm just trying to find my little brush if I can find it. Yeah, so you can see you've got a top here, you've got a low, you've got a high here, you've got lower highs here. So what I'm looking at basically is, guys, is for those of you that don't know, I know that there are some new traders in our group. So what we may see is some kind of M top, and then obviously you will get that sort of formation there at the top, and price to carry on down. So I mean, don't take any notice of the prices where I've ended up, because that's not irrelevant. That's irrelevant. I'll come back to that in just a second. So I have got some more detailed factual TA for you about where the price could end up. I've marked the blue dotted line on there, 71,330. That's our weekly high, and that's where we'd be looking to to reclaim and to hold that as support if we're going to have any kind of any hopes for continuation higher. Just have a look at the monthly, just for interest's sake. It's actually it's actually the same. So the monthly high is the same as the weekly high. So it makes sense that obviously 71 320 is obviously a key price point, and as you can see, we've not quite we made it on last week's wick. We made it to the high, but we got a rejection from there, and now we've got a red candle, and can at the moment we look like we've got some kind of continuation. Nothing's to say, guys, that we could that we may see we could, by all means, we could see something like this, and then we'd be off to the races. So you'd get like this formation here. But let me just tell you a little bit about why I'm concerned about this point here. Just bear that in mind, guys. So what we're looking at, as you can see there, is once that the green line is above the red, that's a positive, a bullish stance. We've got a little bit of crossover there. Most of the correction had actually already happened and taken place there. And we got some support there, and then we just carried on. But we did actually end up coming back below the bull market support band before we continued on at this point. So the crossover is significant. It might not happen immediately, but you can see that the green line crossed below the red, and it stayed below the red for some time, and resulted in this sideways and thus negative price action here. So what are we going to see? What does the future suggest, based on what we've seen here in the past, when the bull market support band crosses into bearish territory? You can draw your own conclusions from that, but let's just have a look. If we go back in time, and you'll see. So let's have a look at the 2017 top here. You can see that you got the green crosses below the red. Again, most of the correction happened on the way down, but once this cross had happened, you can see you then get the price. It loses the bull market support band, and then finds the bull market support band, then becomes resistance all the way down until you get this capitulation, and then price carrying on. There are a couple of other examples along the way. So if we look at the last cycle peak here, again, we were up to, this is the 67,000, I believe. What was the high in that particular one? So that was the 65, let's say 65,000. We know that this was the 69,000 peak, but let's say this, in my opinion, was the cycle high. And I think that this was the the money makers and manipulators were fooling everybody into a big liquidity grab here. But in my opinion, this was the cycle high at this point here. But as you can see, once you get, if we just zoom in, you can see once again, once that the green line crossed below, then you've got continuation. As you can see here again, guys, the cross here happened directly at this point. Okay, you can see it happened directly there. Just highlight that with a line for you. Sorry, there. You can see what actually happened. It crossed negatively, and we got positive price action. Okay, so why am I showing you that? So at the moment, we go back to where we are now. We crossed negatively, somewhere between those two, let's say there, for example. Okay, so we crossed negatively, and what's happening? We're getting positive price action without breaking the high. Okay, so that in itself, again, is interesting, and it's suggestive. Okay. So if we go back further in time, we can see other examples of this, basically. So the warning signals are there, guys. We've got a bearish cross of the bull market support band. And if you go back through history, there are various points of interest, all the way back. If you start to look anywhere that you get this bearish cross of the bull market support band, you can see what happens afterwards. So the vertical lines on the chart, guys, are obviously the the halvings, and as we all know, we appear to be actually quite ahead of schedule in terms of where the price action is compared to where we are. But we'll come to that again in a second, because I've got another chart I'd just like to show you. Just while we're on the subject of this bearish cross, I just want to add a couple more things onto the chart, guys. Let's add a little bit more information on here and a few more indicators. Okay, let's have a look at the MACD, see what the MACD is suggesting. So we've got a bearish cross on the bull market support band. Let's see what the MACD is suggesting. I'm sure that you can see what that's suggesting, guys. Okay, so what we can see here, if we look at the histogram, you can see that on this wick here, it came up to the high. Okay, so this is, this here is, it's a level top, if you like. If you look at the candle body highs and the peak highs here, if you look at the histogram, you've got the height of the histogram here, and then the height of the histogram here. So what that's actually showing, quite clearly, unfortunately, guys, is that you've got that sort of formation at the top. You've got a very strong bearish divergence on the histogram at the bottom. So have a look at the RSI. It's not as clear on the RSI, guys, but you can see that the 70 line is the purple is like the neutral territory. Above 70 is the bullish control zone. Below 70, which you can see here, we've got a rejection. So okay, so we've come down. We were in the bullish territory here. We've come all the way down. We've come below the 70, come back up to the 70 line, and now we're rejecting on RSI from the 70 line from this previous high. We're rejecting here. If we take a look what happened at the last time that we took a rejection from the 70 line, which was there, you can see that we got negative price action moving forward from there. I'm just going to show you what I found from this point here. So if we look at where we were from this is where I think we are now. Okay, I think we're at a mid-cycle peak. Okay, so we're going to have, if we have a look at that, I think this is where we are now. I think we're at a mid-cycle peak here, believe it or not, guys, because of the time that's passed since the cycle high to where we are now. I actually think we're seeing a mid-cycle high here, which is where we are here, and what we saw. I don't think we're going to see, we know what happened here. This is March 2020. Everybody knows what happened there. And we're not going to see anything like that again unless there is a black swan, of course. But, it might happen. You never know. But it's less likely, should we say. But as you can see, guys, it doesn't look very much on this chart. But from that mid-cycle peak here, we ended up with a 51% correction from that mid-cycle peak. You can also see that in the same vicinity, we had the bull market support band crossed in a bearish fashion. Some of the correction had already happened, but you saw what happened afterwards. This, I think, we're going to ignore because of the fact that this is the black swan. This is COVID. So we're going to ignore that for now. Okay, so I'm just going to show you this time fib. Okay, so this is based on from the point of the halving to where there's a good explanation here. Sorry, I'm falling over words here. So the time fib is measured from halving to halving. It shows the peak happens between the 2.36 and 0.328. It's actually very close to the 0.328. Okay, so if we do a time fib extension measured from the halving, okay, so the halving's just happened here, fourth halving here. So I've done a measure from the fourth halving. The 0.382, as you can see at the bottom there, is projecting a cycle peak back out in November 2025. So I think we're actually somewhere in a mid-cycle peak here. It looks very skewed because of the ETF and things. And as you can see, if this is the cycle peak in this small amount of space here, some people might say, well, this is just going to continue to carry on. It has to carry on to get anywhere near, the projections that we've got. So the 2.365, 525k is all the way up there. The 1.61 projection, the 173k is here, if you like, at this level. And so you can see there's not very much time. It doesn't look like there's very much time on this chart. Let me just show you something. I'm going to go by a bars pattern, and I'm going to say that I think we're here, as I said before. I think we're at a mid-cycle peak, and we're going to take it up to, sorry, let me just do that again. So I think we're at a mid-cycle peak, which is here, and I think this was the cycle peak. we move that across, so we're suggesting that this is the cycle peak here. Okay, mid-cycle peak. This part here is the black swan, so I don't think that we're going to experience this type of capitulation, although if prices do come down here, you know, it is a possibility. But if we just ignore that for now, okay, so what I want to do, just draw a line, just to say let's for argument's sake, let's let's ignore below this line. Okay, but what you can see, guys, is if we draw this line out, okay, you can see that there is a significant point of interest there. Okay, this is the right shoulder of the previous peak, which we've talked about time and time again as being a point of interest. You can see that when we came up against that right shoulder, that we came into resistance, and then once we flipped it as support, then obviously the price started to continue higher. You can also see that if I just show you that, if you may remember, that the price correction from the last cycle peak that I showed you on the previous cycle was about 50%. If we go up to the highs here, we go down to somewhere close to, you know, if we go by the fractal, you know, somewhere around the 40% mark. And as you all know, guys, the 382, you know, would be a sensible retracement. You know, it's still in bull market territory. A 0.382 retracement would still be, you know, it would be probably, you know, the first, if we do get this kind of formation down to here, ignoring this part, but if we do get this kind of rounded formation here, you know, then you know, we could end up, if you get that sort of rounded formation, and then you get the parabola afterwards, you can see just from this fractal pattern, just from here, if this is a cycle peak, you can see the 1.618 is here, look, 173,000. And it lines up almost perfectly with the back end of next year. We could get corrective action all the way down here, then find that we get a steep parabola like we did here into the back end of last year. You would then also be able to project a measured move, because we've got this formation here. Okay, you would then be able to do, you know, to do a measured move from, you know, the cycle peak down to the bottom here. Okay, you would expect to see us to reach the same depth, if you like, of this. You would expect to be the same. So this is 0 to 1, so therefore 1 to 2 would take us up to, you know, this level here, 332,000. The 1.618 there is 168,000, you know, and we're into the same realms that we were before. So, you know, I think that we're going to be somewhere between 185,000 and 320,000, you know, at the end of next year. Okay, there's a big range, I know, but, and I did say that I thought it was going to be 130 to 180,000 this cycle peak, but obviously the ETFs and things are going to make a difference to that. And with these projections as they are, I actually think we'll end up somewhere between 180 and 330,000 for this cycle peak at the end, towards the end of next year. But I do think that we are going to see corrective price action throughout, you know, perhaps the second half of this year, you know, which isn't something anyone's going to want to hear, but I do think we need to be aware of it. Bear in mind, guys, as always, it could be wrong. We could see price could just smash through. Once it breaks the all-time highs, you know, it could accelerate and just carry on upwards. We may not see, you know, we'll never see these prices again, but I just don't think that's very likely. So going back to this chart, guys, you know, you may be thinking, well, why am I saying we're going to end up here? I think we will end up in this territory here, but you will also notice, as I've said, I did put this in the scrapbook group, so hopefully some of you will have seen it, but, you know, this could end up all being one big fractal here as well, where we've got, you know, this is basically, you know, a fractal of what's happened this side, okay, and seeing the fractal happen again, we could easily come back down to the support here, you know, back down to 62,000 into June, and as you can see, prices coming down that way as we speak now. But you've also, if I just remove that off there again, you can also see this structure here is very similar to this structure here. So this first peak here is very similar to this peak here. Okay, so you get the big dip, which is this dip here, So it's a fractal. It's very similar, but it's very much smaller. But you can see if we did like a bars pattern from, let's say, this cycle peak here, okay, and did that across, okay, and then we'll just make that a lot so you can see it a bit better. Okay, what I'm suggesting here is that this peak is this one, therefore this peak would be this second peak here, and if we pop this fractal in there, sorry, if we pop this fractal in there as it being the second peak, you can see it's very, very similar, very similar structure. So what's happening, it would come back down, you know, you would get the support back down to this blue support band again. It would make sense that, you know, if you're going to see a head and shoulders pattern, if you've got this low here, that this low would be actually higher, okay, and then you get the head. That's very common to see that. What it means is that the bears are not as strong as they were here, which is a positive sign, and hence the reversal would be stronger. So to get you know, the right shoulder to be you know, not as deep, shall we say, as the left shoulder would be, you know, would be very common, and actually would be a good sign. Okay, guys, you know, it's always remember, guys, anything can happen. Just trying to show you my thoughts, and I hope that it's not, you know, been you know, to you know, ruined any of your hopes and dreams, because I do think, you know, that the cycle high, you know, is going to be somewhere between, and this is the key thing to take away, 170 and sorry, 180 and 320,000. But it's not going to happen until the end of next year, and for us to get that high, we are going to need some kind of, you know, more corrective action, in my opinion, and I think that's what, you know, that's what we'll see. So thank you guys for, you know, for going through the, you know, the bad times. It has been a bit boring. I understand it's been a bit boring and things. The immediate future, just to recap, is I think we are going to be up into this territory. The liquidity all sits up here, so I do think that, you know, before long we are going to see this, you know, 75 to 80,000 price tag up here. But I think we need to be very careful. Once we're above 75,000, you know, we could very well see that could be the very, you know, the point where on this chart we get up here and we create something like this, where you've got, you know, you've got highs here, then you've got, you know, higher highs. Okay, we could see highs, then we could see new higher highs, and then we could see this correction, and then later in, you know, later into next year, then we see something like that. So that's what I think, guys. Just I'll keep my eye on things. If it changes and I change my opinion, of course I'll be in touch and I'll let you know. So I'll always update the group anyway. So keep your eyes on that. If you've any questions, you know, please put them in the VIP chat, and I'll be more than happy to answer your questions. So thanks again, guys. Take care. Thank you very much for listening to me ramble on, and I'll speak to you again soon. All the best, guys. Take care.